Okay, welcome back to the weekend video. This is Enna here from bullwebs.org, and I'm going to go through the markets as usual from an Elliott Wave perspective and to see what might be in store and give a review of the week as well to see what's happened. Okay, I'm looking at Eurodollar daily here, and the kind of long-running debate I've been having with myself because I just talk to myself here, nobody else to talk to. The long-running debate that myself and I have been having is this correction, this upside correction in wave B complete as what you could call like a failed flat, with wave C finishing below the wave A high. That wave A high is marked there by at 125.61. It's possible. It's very possible, and that's kind of what I'm running with right now. Although we are still within the realm of a long-running triangle in wave B, which basically says Eurodollar will trade sideways for the next 6 months as wave D and E trace out to complete a triangle in wave B. We'll see how that works out. So basically the trend will basically net sideways with a narrowing range within that as well. Okay, so with that said, let's get into the 4-hour chart here. Where's my label? There it is. 4-hour chart. A possible 1-2 pattern with a wave 3 underway is what I'm working with right now. In terms of the alternate count, that could be viewed as wave ABC down of A, and then we get ABC up of B, and then wave C of D would head lower again. So still a lower low, but the action won't be, in terms of the alternate count, the action won't be as, let's say, impulsive. Now, in saying that, we haven't really reached a kind of an impulsive acceleration lower either in the main count. Okay, so if this is wave 1 and 2 complete, then you'd expect 5 waves down in wave 3. And in that case, the minimum target would be 115.99. Call it 116 or a break of 116. And we ain't there yet. Let's get down into this. Here's the third wave broken down in the hourly chart. So here's Eurodollar hourly. You can see we've got a 1, 2, 1, 2, and then a third wave extension lower. I'm not against the idea that this is wave 3 still underway, and maybe we've just got wave 3 of 3 and now 4 of 3 complete, and then we head lower in wave 5 of 3. We'll see how that works out. In general, I want to see price hold below 118.35 and then head lower again into wave 5 of 3 of 3. That minimum target there below 116, a break of 116. So 115.79 or 115.80 on this chart. Yeah, it's very possible. It's not too far below us here. Another 150 point decline. Could happen quite easily by Monday or Monday evening. We'll see how that goes. If we do, that'll give us 5 waves down. It'll probably it'll probably spell the end to wave 3 green if this alternate count here isn't more fitting. But again, it's just step by step. So far, this count is working out okay. We're trending lower. We're in a trend channel. Let's see if we get a break again to a new low below 117 early Monday. Okay. Here is the 4-hour count in pound dollar. Now the alternate count would be labeled here within this very large red circle. Again, it is a call for a possible triangle in wave 4. You can see wave 4 triangle there. Just moving this along. So at this moment in time, we could have wave A and B done. If this alternate count is correct, we've got ABC down in A, ABC up in B, and then we should head lower again in wave C next week. The main count is on the hourly chart. I'll go into that in a second. The main count, excuse me, everybody's going to start yawning now, will suggest that we have 5 waves lower again ahead of us in a third wave down. So let's see how that is working out so far. Again, you can see I've got a 1-2-1-2 pattern in play. Now you can easily call that an ABC down, an ABC up, so that could be the alternate A and B that I've shown on the 4-hour count there. Here's the hourly count. But if we've got a corrective channel completing in wave 2 now, then early next week we should see an acceleration lower into wave 3. But I want to see that start pretty immediately on Monday, or at the very latest by Monday evening. On the very top end here, we want to see that wave 2 high at 140. We want to see 140 hold, and then head lower into wave 3. Okay, here is dollar yen. Been looking for this nice acceleration in dollar yen for a while, and we got that this week, or actually over the last few weeks. It's been a significant rally in favor of the dollar, which is interesting given the fact that you hear nothing but the end of the dollar is coming. I don't see that, not yet anyway. So we've got wave 1 and 2 complete, and it looks like we have 5 waves up in wave 3, and we've hit our target for wave 3. Target is 110.80, and that's where wave 3 reached 162% of wave 1. So we've got target in play. We might have one more pop to the upside. This looks like a corrective line so far. So let's get into the hourly count, and I'll see. We'll break that down, see how that's gone. So we've got a wave 3 of 5 in play this week. Nice acceleration higher this week, all within the bounds of the wave count. So it's looking pretty good. I'm not sure if this 4th wave is complete yet. It could be 3 waves down in A, running flat wave B, and then we head lower again in wave C. I'm looking at maybe about 110.20 down at the lower trend channel line here. If we hit that, and it's still in the corrective form, then I think we'll probably head higher into wave 5. Probably by Tuesday or early Wednesday. But for Monday, I'd like to see this corrective pattern close out in wave 4 and then head higher into wave 5. Okay. Here is the stock market heading out to a new high. This long-term alternate count, or this 4-hour alternate count, came into play this week. And it looks like we're getting 3 waves up again in a contracting range. Within this ending diagonal pattern, we've got 3 waves up in 1, 3 waves down in 2, 3 waves up in 3, 3 waves down in 4, and now we should trace out 3 waves up in 5. Continue this pinch upwards, continue the failing momentum upwards, and then we top out. That's the way it goes. We received obviously plenty of criticism from people saying that that this market is never going to, it's not that the bull market is only beginning. Basically, the general consensus of people who like to rail against me say that inflation is coming, that the government is pumping lots of money in. They've just printed $2 trillion in stimulus money. Might I just add that they have okayed 2 trillion or 2.5 trillion, whatever it is, in stimulus money, or in building back better. Is that what they call it? I had to laugh to myself this week. Basically, it's spread over 10 years, so that's 200 billion, 250 billion, let's call it, a year. So that ain't a whole lot, given the fact that the deficit is pushing nigh on 2 trillion every year at this point, or $1.5 trillion, was it last year in the US anyway? So, in context, it ain't a whole lot of cash. especially when you're talking about a $21 trillion economy. It's 10% of the economy, and they're talking. You know, when politicians open their mouths, it's just the most. Oh, I don't like to listen to them. I can't listen to them because it just make you feel sick in the stomach. But they spoke about it, you know, like as if they have the elixir that's going to fix all of humanity's problems, which they don't, and they can't. There's only one that can do that. Jesus can do that, but politicians can't. But anyway, they were talking about this darn stimulus package, and the things they came up with was roads, fix the top 10 biggest and most important bridges in the economy. And I had to just think to myself, you know, you have offices and retail collapsing, offices and retail space. The rents are collapsing across the world, especially across the big, you know, cities in the US. And what you're focusing your money on is fixing bridges to cities that people don't want to live in anymore and they don't want to drive to anymore. Okay. And you're fixing the damn things that are already in existence for a technology that you say is on the way out, you know, cars. So anyway, it just defies all logic. But then again, idiots don't like logic in the first place. So why am I even talking about it? Anyway, okay. Wave 5, 3 waves up. You know, bring it on. Here it goes. Here's the short-term pattern. It looks like maybe we have wave B. This is wave A, B, and C up in wave 5. It looks like we might have wave B complete, unless we get an expanded flat and we head lower into wave C of B early next week. Still possible, even though we broke to a new high. Even though we broke through a new high on Friday. At the moment, I'm calling this a small 5-wave pattern higher in wave 1. So we got wave 1 and maybe wave 2 by Monday, and then we head higher into wave 3. So 5 waves up in wave C of 5 is the outlook for next week. So let's see how that goes. Okay, gold. I'm going to. Here's a 4-hour chart in gold. I'm just going to expand on this little pattern that I'm running here. It's a straightforward 5-wave decline in wave C in red there. You can see 5 waves down, 3 waves up in wave 1 and 2, an extended 5-wave pattern in wave 3. And then we have this interesting, actually, that's wave 2 there. We have this interesting decline and rally that we've had over the last week. Now, I was going with the idea that wave 5 was already underway and that we were accelerating lower into a third of a fifth. We have rallied back significantly enough to rule that out. Now, this pattern is either a running flat wave 4, or we get an expanded flat by breaking out above 1755 again, and then heading down into wave 5. But I still think that this is probably a 4th wave underway, and we get to a new low in wave 5. The kind of tentative target has always been below about 1650, and we'll see how that works out. So it's a 4-hour chart. Let's get into the hourly one here. You can see how this flat pattern can be, how would you say, can fit the bill here. 3 waves up in A, 3 waves down in B, and then an ongoing 5-wave pattern into wave C, possibly. If this is an expanded flat, or sorry, a running flat, then wave 5 will finish probably below that B wave 1745 level. I get the feeling that Monday will bring a decline anyway, given the fact that there was no trading on Friday, and given the fact that we had new highs in the stock market on Friday. So you get the feeling that that'll probably be the euphoric acceptance of stocks will probably go against gold. We'll see how that works out. Either way, I still favor one last decline in a fifth of C to complete that whole correction in wave 4, and then I'm a long-term bull. So let's see how we get on with that next week. Okay, there was no trading in crude oil either on Friday. Commodities markets were closed. Still looks like we're heading towards a 1-2 pattern off the high. Excuse me. That's a 4-hour chart. Let's get down into the hourly chart here. We have 5 waves down in wave 1, an A, B, C pattern underway in wave 2. The alternate idea would be that we have wave 1 and 2 tracing out here now. Not quite in favor of that, but it's still a possibility. I think I will leave it till later on next week, or towards the middle of next week, before we start looking for wave 3 down to begin. But let's see if we finish this 1-2 pattern, and then we have a nice right shoulder, left shoulder, head, right shoulder, and decline. That's the outlook for crude oil. Let's get into the S&P. This is a 4-hour count in the S&P. Again, it's that extended ending diagonal pattern. We look like we're heading towards, or we have pretty much 3 waves up in wave 5 now, close to completing actually now. You have wave 5 in green here with ABC heading up in wave 5. It looks like we'll probably head towards that 4100 level to hit that upper trend line again, and then we head lower. Here's the hourly count. We reach equality, wave A and wave C of 5 reach equality at 4120. So if Friday's rally was an extension in wave 3, we're quite close to that level now, so we should get a 4th and a 5th wave up towards that kind of 41, between 41 and 4120 for a high in wave C. And at that point, we'll have 3 waves up complete in wave 5, and I'll be looking for a decline again. And that's the outlook for next week. We want to finish this C wave up. Okay, silver. We had a little rebound in silver last week also. The major pattern has not changed. It looks like we're still going to see further lows to complete wave C of 2. Now, this pattern may well develop a little bit differently than what I've expected so far. We could have, again, an ending diagonal pattern. We could have a wave 1, 2, 3, 4, 5 down in an ending diagonal in wave C, but we'll just have to see how that goes. For the moment, I'm sticking my flag in the ground for a normal 5-wave pattern. All we're seeing here is a small correction higher. And I'll show you here on the hourly count. Here's the hourly chart. We have a series of 1-2s, and now we are heading down into a 3rd wave. This 3rd wave in green here is, it's mixing it up a little bit. The minimum target is at 2312, and that would be where wave 3 in green reaches equality with wave 1 in green. We'll see how that goes. It's quite a small 1-2 pattern off the high, but this extended 3rd wave here looks reasonable. We've had 3 waves up so far in wave 4, but we need to see a pretty quick decline next week, back below 24 again, to signal out that wave 5 is underway. So Monday, that's what I will be looking for in silver. And apart from that, maybe I'll jump to the Nasdaq for a second. FTSE actually seems to have completed a triangle. So we have wave A. In FTSE, I'm looking at this A, B, C up in B before we head kind of into a pretty major crash in wave C again. You can see that A, B, C pattern. And I think it could be a double combination, or actually, if you parse that out, that central B wave there, it's probably a triple combination. So in general, people would mark that X, Y, Z, but I'm too dumb to work with different levels or letters. I just keep it simple, stupid. On the 4-hour chart here, you can see this is the C wave with a 3-wave pattern. So we've got wave A, B, C, D, E, wave B, and we head higher into wave C, somewhere up around that 77 level again. That will bring us, back to the daily chart, that'll bring us well, to the lower end of the previous. Well, actually, no, up to the upper end. 77 would probably bring us up towards that upper shoulder here, this left shoulder here. So it's an inverted head and shoulders what we got going on here, and then we head lower again. The hourly count, you can see the triangle here, the continuing kind of pressure on the price action, and we may be heading out of that now in wave C. So let's see how that goes over the next couple of weeks. The Nasdaq, it looks like we've got wave 1 down complete, and we are tracing out a larger wave 2 ABC pattern. Looks like a flat correction, or actually, well, you could yeah, you could. It doesn't really matter, but you could call that 5 waves. If it was a triangle here, you could go wave 1, 2, 3, triangle 4 up in 5, and then 3, 3, 5 down in wave B, and then 1, 2, 3 up this week up in wave 3 of C of 2. We're heading towards that 78 Fibonacci retracement. That'll be 13,530. We'll call it 13,540. So let's see if we get a little correction and a pop to a new high in a new lower high in wave 5 of C of 2 next week. And that does it. This is Easter weekend. This is the time we celebrate the resurrection of the Lord. So the death and resurrection, which saved us all from eternal damnation. And if you don't want eternal damnation, I'm just putting it out there that maybe you should try this. And, we're terrible gods of our own lives anyway. So, give your life to the real God, the true God. And things can only get better for you. Okay. Apart from that evangelization, let's move on with the weekend. I wish you a blessed, peaceful weekend ahead. Happy Resurrection weekend. Happy Resurrection Sunday tomorrow. And God bless. Be good. And I'll see you Monday evening. Everybody on the website, I'll see you Monday evening. And everybody in YouTube land, I will catch you next Friday, hopefully, if I'm still alive. Okay, God bless. Bye-bye.